What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 6th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and to my fellow patriots in America, I hope you all had a wonderful Independence Day. And in today's video, I want to spend some time to talk about two key topics. I not only want to talk about the block halving that's coming up in 2020, trying to provide at least a non-biased view on what the block halving is going to mean, but along with that as well, talking about how the macro factors at play are setting up to provide a good year, continuing off of the already impressive price action we've seen in Bitcoin, as well as in other commodities such as gold and silver. So we've got a lot of things to talk about, guys. It's going to be a really exciting video, but let's go ahead and dive right into it right after our quick sponsor. Alrighty, everyone, so let's go ahead and take a look across the board for the market. As we can see over the last 24 hours, most cryptocurrencies are in a no-trend scenario between 1 to 2% to the upside or downside, and this is following a recent dip that we had in crypto markets led by Bitcoin. However, at the same time, as much as Bitcoin dropped a decent amount, as well as other altcoins wiping off about $10 billion in valuation on the 4th of July, we've actually recovered a lot since then. So again, it was kind of a non-event, and we can see Bitcoin dominance is still remaining steady at the low 60% range. So not much has really changed since we last did a video. Now, in the sense of upcoming crypto events, there's really three ones that I'm watching at the moment, and they're pretty big events for markets here. We've got, for example, the Seller Network mainnet launch. This was one of the Binance IEOs, and Seller's got an interesting second layer solution scaling technology. So I'm interested to see how it launches and if they can actually get some development for it. We also have another Binance DEX listing, which is the Tomo chain, and then outside of that, on the second page, a website launch for Arc. And the last event that I think is actually quite significant here is the mainnet launch of Anchor. This project raised a lot of money during the bear market. I'm interested to see if they'll actually be able to prove the proof of useful work. That was their whole mantra. And then there's also another mainnet launch for Airblock, which I've never heard of before. But anyways, I want to go ahead and talk a little bit about the current status of the market, guys. So you probably might have heard me mention in this case that we've been going through a little bit of a correction here, and we've been setting lower highs and lower lows for Bitcoin. And we can see that here on the daily. Again, each day we're setting really, again, lower highs in the sense of price, and again continuing to set lower lows. At least we've set 3 lower lows here in the sense of the previous past few days. So as we're continuing to struggle to get back up above previous levels that we tested in the last few days, it looks like we're going to dip further. Now, good news, guys, is I'm not being bearish on this. I'm not saying that Bitcoin's going to 6,000 or 5,000. I don't think we're going to make it there as much as I would like for it to correct there, so I could average down even more. But in the grand scheme of things, I do believe that we could have a full-scale 40% correction. We already had about a 30% correction going down to this range, as we can see, as we'll take a look from the high here down to this range, exactly around 30%. So a 40% correction is not that much further, right? That would bring us back down to around 8,100 to 8,250. So I think that we can get around that range, but my main point here is that I'm not going to wait around for 8,250 specifically. I'm going to be adding on when we get, another sell-off day here. As long as we keep getting down towards this low range around the, below 10,000 range, I'm going to keep averaging in. And I'm going to take upon these opportunities. I'm not going to get greedy, guys. The reason why is because I think a lot of us were, in a sense, being greedy by waiting for Bitcoin to correct here. And this rally is a little bit different than the others, right? We're still going to get 35, 40% correction, I think, rather than just a 30% correction after this kind of fast rally. But, the reason why I'm historically confident in that is because we've seen in Bitcoin, depends on whether or not you take the low from over here or the higher low and really consider this as the exit of the accumulation phase. We actually moved a very similar percentage range in gains from this low to this high, and afterwards had a 40% correction, similar to how we did over here. So again, you guys can draw the percentage. If you want to access this tool, the date and price range tool, it's right here in the sidebar for TradingView. But I really recommend you guys use that in your trading strategy to see how previous cycles have moved and to gather some details on that. But Bitcoin isn't the only one right now that's correct in the short term. We also have a very close commodity that in very much in nature is similar to Bitcoin in the sense of its limited supply and being seen as a non-correlated asset to hedge against traditional markets, and that is gold. Gold is moving quite similar. In fact, this past month as Bitcoin was ripping through, gold was having one of its best months in the past few years, setting all new highs for the last 6 years, guys. Absolutely incredible stuff. We have not seen gold move up to these levels since all the way back here in 2013. In the summer of that year. So it's very exciting to see. Now, at the same time, again, we have a very similar pattern here. We have a double top, and again, we look like we're going through a correction here. Now, gold markets have stopped trading here on the 5th. We're going to have to see how markets open up, but this, to me, and any technical trader would look like this needs to have a pullback down to something like 1340. But the fact of the matter is that even though we're expecting these corrections, guys, the reason why I see these as great opportunities is because I have much higher price targets for Bitcoin and gold going into the later part of 2019 and into 2020. And that's why I'm excited about this. I know that the macro perspective right now is playing out a scenario for gold as well as Bitcoin and other cryptocurrencies and silver as well. It's building up a scenario where people are going to want to hedge into non-interest bearing assets as well as non-risky assets like stocks and properties that have ballooned up in their biggest expansion in history. We've had the longest running expansion. And when you start to realize a lot of these factors, they start to kind of hit like a domino effect. Now, at the same time, many people would probably ask the question, Nick, like you've talked about as a recent, obviously, as interest rates go up and as the Fed continues to roll off its balance sheet, this is going to be bad for stocks, right? But we've also talked about as recent, the Federal Reserve has decided to start cutting rates. They're going to do it as soon as this month. They're going to do it probably in the next FOMC meeting. And along with that, there's talks and considerations, as Powell's hinted to, that he would happily consider using quantitative easing yet again, using any of the monetary tools they can utilize. And really, those are the two weapons, but using QE in a unique way, which we haven't heard him admit yet, which is going to be directly buying up stocks. So if they do that and they lower interest rates, making capital cheaper or credit cheaper, why would you bet against the stock market? Well, we've talked about this, right? We've talked about, again, if they start to add on to the balance sheet, we've talked if they decide to cut rates again back to zero, there's a lot of room to potentially push stocks higher. But notice how when there's been hints about these things, guys, that markets have not only struggled still, the NASDAQ has still really yet to break significant all-time highs since all the way back here in the fall of 2018. It's almost been a year since we set all-time highs. But along with that, even if we are able to break through these levels, and even if we're able to rally to NASDAQ 10,000, if you really take a step back, if we go to the monthly chart here, turn off our drawings, and even if we take a look at the logarithmic chart, there's not too much room left to run in this cycle. As we mentioned, we have been in one of the longest expansions in history. Markets need to retrace. Even if you inject liquidity, into the market, sometimes people take upon that opportunity to offload serious positions, right? And then after that, you don't have any buy-side power coming back in. Once that Fed liquidity and central bank liquidity across the board and other global central banks starts to dry up, then you can start to see a correction. And again, I have no doubt, if the Fed really does go through and cut rates 3 times this year and does talk or at least hint this year about adding onto its balance sheet and buying up U.S. equities, yeah, we're going to probably go to NASDAQ 10,000. But there's a reason that gold has been moving the way that it has. It's something very significant to note. And it's the same reason why Bitcoin's moving this way, guys. I think Bitcoin, of course, a lot of people are coming in because we had a nice correction in Bitcoin. People were excited about the emerging technology and space of it, but it is seen as a perfect hedge across the world. It is a great hedge. It has all of the properties of gold, if not better properties. It's easier to divide. It is globally transferable. And unlike, for example, in this world where I could put a gun to your head, and I'm not threatening anyone here, but as an analogy, so okay, I'll put it this way. Someone could put a gun to my head and say, Nick, give me all your gold. And I could say, no, I'm not going to give you my gold. And then they shoot me and they take my gold out of my pocket. If I don't give them my keys or my keys are hidden somewhere, then, I have true sovereignty over my money. They have no access. They could kill me, but they're not going to get my crypto. And that's the cool thing about crypto is it's kind of this, this true sense of autonomy and the sense of having control over your finances. So I don't know, I'm getting all philosophical here, but the point here is that there's a lot of people who are going to start to appreciate this. A lot of wealth across the world will flow into cryptocurrencies from institutional finance to more kind of offshore world finance, and then also retail investors and people who want to put their wealth in somewhere they can trust, as well as the market this is really built for, which is emerging and developing economies. So I know I've rambled on enough about that. We're going to dive in here in just a moment into talking about the block halving. Just wanted to talk a little bit about some mentions for our sponsor, Avala. There's some really interesting developments. As we can see, there's been a recent partnership with CoinDesk, a consensus in Asia, and they're actually going to be helping them process bookings for hotels for those who are attending the conference. And we already know that Singapore is a very bullish place for cryptocurrencies. They're very open to cryptocurrencies being one of the big financial capitals of the world. And this is a really cool little chart here they have in the article showcasing some of the places you can actually use your crypto. Down here listed the locations. I actually went to one of the, I think the tea shops, Ducatus Cafe. I went there when I was in Singapore and I bought some tea with Bitcoin. It was really cool. It was one of my first few like physical real world transactions. I'd done some e-commerce purchases with Bitcoin in the past, but again, this is really exciting. Not to mention there is huge savings in the sense of your hotel bookings, up to 40% comparative to booking.com and a lot of the other leaders. And the June report here for Avala is really exciting. They've actually been able to increase their bookings from 432 back in April all the way up to 701 here in June. So again, as this early stage startup that's really again supporting cryptocurrency merchant payments, they've done really well here over the last few months. Really good month over month growth. And you can see here that most of it is in cryptocurrencies. So actually, I think we got 76% of the total bookings were paid in cryptos. And you can see the breakdown here between different types of merchant payments. So we can see BTC is obviously dominating. And as you would guess, kind of going down the market cap here, you have other players coming into play. So very exciting news in the sense of Avala. Glad to be an ambassador on board on the team. Now let's go ahead and talk a little bit about the Bitcoin halving. So this article here, I think, is a good kickstart here. And as we all know, Tone Vays, for example, who's kind of the main subject matter of this article, has been, considering the idea that we're going to see a pretty stark correction on Bitcoin. And he believes that over 70%, possibly up to 70% of miners may shut down operations by Q4 of 2020. Okay, so this is, Q2 of 2020 is when we're expecting the block happening, pretty much May of 2020. And after that, he believes that, 70% of mining operations will shut off. So there's going to be huge, hash rate shock to Bitcoin with this happening. And the reason for this is that, it's a simple matter of economics in Tone's eyes, as well as many others. He's not the only one who's been saying this. Technically, everything is in play until the end of 2010. After that, sub 5,000 is not likely. Worst case scenario, price drops to 5K into the halving. Then after the halving, 70% of miners will shut down due to negative revenue. Bitcoin spirals down in price, but then rises from the dead. Okay, so the idea here, to summarize what Tone's talking about, is something that we haven't seen historically. But it's basically the idea that as the difficulty, not the difficulty adjustment, as the block halving comes into play, as you're getting half of the Bitcoin that you used to get, this means that if price were to stay the same as where we are right now, profitability drops in half, right? The Bitcoin that you're getting for your mining drops in half. It would be kind of like, for example, if all the oil rigs in the world, were drilling oil, or all the gold mines were just mining gold, inevitably, any kind of chance of receiving some kind of extraction out of the ground of commodities that you're looking for just instantly drops in half. Like the available supply underground just pops like that. So the thing is, even though we can pre-plan this, we know when the halving is generally coming, we know what the reward cut is going to be, how is it going to look in the case of mining? Will miners naturally adjust? Well, historically, we've seen that this isn't too much of a doomsday scenario for Bitcoin. We don't see massive depletions in price. In fact, sometimes price drives up steadily ahead of a halving, and then afterwards probably has a slight retracement. And this is a really good article here. This was an article back from July of 2016. It talks about what the block halving is. It's, again, the predictable decrease in the inflationary rate of Bitcoin. Again, it's a deflationary currency by technical terms, but again, I know people hate me using the term inflationary. At the end of the day, though, Bitcoin supply, until it reaches 21 million, it is inflating, but the inflationary rate is declining steadily to where we are going to reach a finite supply, where there will be one day no inflation in Bitcoin, which makes it deflationary in nature. So a lot of complicated financial terminology and economic terminology. But as you can see here, we have, since the inception of Bitcoin, had a very predictable rate of what year we're going to reach these block halvings. Okay, so this means that there's going to be a cut in the block reward. So let's go ahead and talk about what happened last time. And I really love this perspective here. This guy, who wrote about this, really talked about, the change in pace. It's kind of funny as well. They talk about, Bitcoin being at just over $10 billion in valuation. God, it's funny. He's recollecting how it was over 128 million back in the day. I'll take 10 billion Bitcoin. I'll take $10 billion market cap Bitcoin. Anyways. So he said, what happened? Not a lot. I wrote a few articles at the time. The block was found on Slush's pools, this is one of the big pools at the time, by a relatively new user called Laughing Bear using a GPU and a standard PC that he normally used to play games. Bitcoin was going from USD 12.17 at Mt. Gox, so it's $12.17, and there was a whopping 13.56 BTC of fees in the block, approximately $165 at the time. It's crazy. The entire block reward was 38.56 BTC, and the going rate at the time was just short of US dollars of $470. Oh, how times have changed. It was almost a year before we had any serious price movement, and it did not seem related to the halving at all. The entire Bitcoin market cap is just under 128 million compared to just over $10 billion today. Speculation with the mainstream media and more than a few Bitcoiners was that Bitcoin would be over. After all, how can mining continue at such a low return? So again, the same genuine concern here. The difficulty did have a little bit of a dip before the halving, but continued to grow. We knew that at the time, the next generation of cheaper and more efficient miners, ASICs, which we commonly use today, you have to use using an ASIC to make a profit on Bitcoin, were about to become generally available. But we were still mostly mining with GPUs and FPGAs. If you had more than a few gigs of mining power, you were considered a serious miner. All in all, it was a bit of a non-event. So, again, this is what they kind of correlated on what would happen in 2016. And in 2016, we actually had a very similar scenario. It wasn't really that big of a deal. Again, the main factor here is that there's going to be a few different things that happen. The first one is that some people, unless the price is substantially high enough, are going to shut off their mining operations. Is it going to be a severe 70%? Probably not. And the reason I say that is that whether it's coincidental, whether it is miners who have an incentive to, buy up Bitcoin in this case, for people who are actually mining Bitcoin and not just simply selling it straight on market and are actually holding their Bitcoin for the long term, again, there's different people with different business models. Most miners just sell it directly on market. They usually sell it through OTC or they sell it on exchanges through spot markets. But the fact of the matter is as institutions like Grayscale, like Arisax and Bakkt are buying up Bitcoin on market, they are buying up any increase in supply, at least the vast majority of it, on the open market, which is keeping prices up. There is actual demand right now, whether it be people who are getting in, retail investors who are getting back into cryptocurrencies, or institutions that are preparing for the next wave. There is a lot of buy-side demand for Bitcoin. And I don't think that even as the block reward cuts in half, you're going to have 70% reduction in miners, right? Unless there's a serious cooldown by 2020, because there's a few reasons for this. One, the supply is getting extremely limited, guys. We are getting towards the upper band here in Bitcoin's controlled supply to 21 million coins. But along with that, we keep seeing the hash rate continue here throughout this market. And even with this, if we take a look here, we can look at the actual mining profitability for Bitcoin. And take a look at this. We'll bring another log chart so you can see it here. We've been seeing an increase here in profitability, a pretty steady increase for profitability for Bitcoin mining as we've been exiting out of this bear market. So we have some room here to potentially drop in profitability. Again, it's declined steadily over time, guys. Of course, this chart is going to decline steadily over time. Bitcoin mining was extremely lucrative back in the day, but it's now very competitive. All in all, though, we still see, again, not only Bitcoin continuing to climb in the sense of its normal monetary policy, but along with that, even as the difficulty is going up here over time, the hash rate is still continuing. People want to get a hold of some of this Bitcoin. All right. So again, I think it's going to be much of a non-event. It's just a kind of prime realization that we're getting into the later stages of Bitcoin's monetary cycle. There really isn't much Bitcoin left to be made. You can take a look at the supply. I think we're sitting at I think it's 18 million right now. I'll get the official number here. So we can see here total circulating supply. Oh, so we're close to it. So we're at around 17,800,000. So I think we're about 500,000 BTC, about 550,000 BTC away from the block halving, and which is estimated to be in May of 2020, as a block is usually produced every 10 minutes. So Very exciting stuff, guys. A last topic that I want to talk about, and I'd like to know what you all think down below in the comments about the block happening, if you think this is going to be a serious FOMO event. My best advice, just look at what happens in history, guys. History will tell us, and we see that there's a lot of ramp up and happenings and then a sell-off afterwards. That's what we tend to see. So could the Libra really replace current cryptocurrencies? So Buterin, or Vitalik Buterin, the founder of Ethereum, recently came out stating that he personally doesn't believe this. And I like these quotes here. I mean, basically, he even keeps it, almost kind of stupid simple in a case. I'm not calling Vitalik stupid. I'm just saying he keeps it very basic in his analogy of this. I think some people overanalyze it, and we talked about it, and I kind of ranted about it in my Libra video. And that is that, he claimed here that I think one of the benefits of crypto assets is that it's going to be hard to replace the feeling of not being thoroughly or completely owned by a system. And Libra is the pure definition of being owned. It is owned by a consortium of companies. Now, they do have the idea of making it a permissionless blockchain and opening it up to other individuals who want to help contribute to the network and run nodes, but that's a far out theory of what it wants to become, or a goal of the future. It's not the current scenario. Right now, it is owned by a consortium. Right? It's not a Facebook coin, but it is a Visa, a MasterCard, a Facebook, a Spotify, consortium of corporate entities that own this cryptocurrency. And it's backed by traditional fiat currencies, though it may provide stability. It's backed by fiat currencies across the world that are enriched and rooted inside systems that are controlled, most definitely. So again, I completely get Vitalik's point on this. I think, again, as much as the Libra might provide a leap forward to get a lot of people used to QR codes and mobile payments and used to using digital currencies, even though we have used digital currency or cash for a while, it will get people more, used to having your own wallet and managing your own money and transferring it peer-to-peer, as we've already started to see with Venmo and a lot of payment solutions out there. So I think that's really one of the most solid points here, guys. I'd like to know what you think. I think the Libra, though it may exist for some time, will not be the final solution, especially not the solution for people who need cryptocurrencies. As I mentioned, people in developing economies and places across the world that are facing totalitarian governments, oppressive governments, inefficient payment networks, and most importantly, people who need safe havens against the monetary policy of failing central banks, of hyperinflation and depreciating currency. Anyways, I've rambled on enough today, guys. I hope you all are having a fantastic weekend wherever you are. And if you guys like this video, please drop a like down below. If you haven't already, consider subscribing to the channel, dropping the bell icon. And if you're looking to get engaged with a variety of different resources in crypto, feel free to check out the links down below. You might find something that you like to help support the channel. That being said, guys, thank you all so much for watching. I hope you are having a fantastic day, and I'll see you all in the next one. Stay tuned.